Revolutionising renewable energy markets, Fiona Tiller on Tracex and the future of REX. In this episode, Dr. Gemma Green is joined by Fiona Tiller, CEO of Tracex, to explore the transformative role of renewable energy certificates in the energy transition. Fiona discusses the inefficiencies of the current over-the-counter trading model and how Tracex is addressing those challenges through digitalisation, automation and enhanced transparency, streamlining processes for buyers, sellers and brokers alike. I'm your co-host Anthony Pearl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
I'm really delighted to have on the podcast today Fiona Tiller, who is the CEO of one of Powerledger's products called Tracex. And we're going to be talking about Tracex today, which is a marketplace for trading energy attribute certificates, such as renewable energy certificates, and really diving deep into what are they, how do they work, why are they important, and what's upcoming in the industry. So I'm really delighted to have you here today, Fiona. Welcome.
Thanks, Gemma. Great to be here.
So Fiona, you're Australian based in Perth. It'd be great to hear a little bit about your background and how you came to work in this field.
It was a bit of a journey, as you said. I grew up in Perth in Western Australia, and after high school, I was lucky enough to get a scholarship with the state energy company here. So they sent me to university. They gave me hands-on training across their key business lines. And I spent about 4 years there. And after finishing my degree with finance and marketing, moved in to become a foreign exchange dealer in their treasury department. But I guess like a lot of people in their early 20s, I felt the itch to go see the world. So I packed a backpack, set off traveling, and about 7 months later found myself in London and probably ended up staying there for about 6 years. During that time, I worked in large corporate investment banks, focused primarily on markets and investment technology. It was a steep learning curve for me, but just an incredible experience. I got engaged in London, and after getting married, my partner and I decided to move back to Perth. So over the next 13 years, I worked in retail and business banking, primarily in product and technology roles. A big part of my work involved developing technology solutions to make processes more efficient, removing manual steps, leading projects like building new banking payment rails, and solving really some of the bigger challenges facing the business bank. But after 13 years, I felt like I'd touched most parts of banking and wanted to do something new. So I saw that Powerledger was looking for a product owner. And coincidentally, one of my past colleagues from my early days in energy was an advisor there. So I reached out to her, and she actually offered to set up a coffee date with you, Gemma. And I think probably about 20 minutes later, my phone rang and it was you calling to discuss the role. So I've been with the Powerledger team since then. And now I'm leading the Tracex business, as you said, and scaling our product in the US market.
Amazing. And in terms of like REX, maybe we could just talk a little bit about what they are. Why do we need technology for them? Like what's happening in that space that we would need a product even, and what are REX?
Yeah, sure. That sounds good. I guess a REC is a digital certificate or a certificate that entitles the holder or owner of that certificate to the environmental attributes that are directly attached to the renewable energy produced. And one REC is worth 1 megawatt hour. From a REC market perspective, I think that generally the vast majority of RECs today are traded in an over-the-counter model. And what over-the-counter means, it's essentially a contract that a purchase agreement to buy a certain amount of RECs. Usually it's vintage-based. Sometimes they get to specify the type of fuel. It's the volume and the price. So it's the very generic contract buyers enter into today. But in the over-the-counter model, it comes with a whole lot of manual processes. And really, I guess that's what we sought to address with Tracex.
Fiona, are there any challenges in the current REC trading model today, or is it all hunky-dory?
I think there are challenges, like for corporations trying to meet ambitious renewable energy targets. The vast majority of trades are done over the counter, which is a manual transaction, and these can be a real headache for corporates. Often they need to go through market intermediaries to buy RECs. They pay premiums when transacting in the retail market, and what should be a very straightforward deal takes a long time to get done. It's also very unlikely that they get access to the detailed data on the RECs that sit behind the contract they're entering into, which means they waste more time in the long term when they need to collect that data for the annual reporting cycle. It's really frustrating, I guess, because these inefficiencies make it harder for them to hit their goals and feel confident with the process. And it's not just buyers, it's generators also. So they don't have it easy either. REC trading isn't necessarily their core business, so it's often an individual or a small team that are responsible for selling the RECs. and they often don't have the tools needed to help manage that process. They're also reliant on other teams within their business. So their legal team, their finance team need to get involved in parts of the transaction, which means there's a wider operational cost to that transaction. And the deal takes longer because it's got to have multiple touch points within their internal teams. And finally, really, they face risks with payment delays or default, which means often generators will go through market intermediaries to sell their RECs. So they're probably not receiving or not optimizing the value that they could get for those RECs if they went direct to end buyers. My view is that the transactional process is far more complicated and costly than it should be. It's vital that buyers and sellers have the right tools to navigate the market and find a deal that's best suited for their needs. So that price transparency, the ability to differentiate between higher quality RECs, having access to enhanced data, effective reporting and auditing, these are all really key to having efficient market outcomes. And essentially, these are the problems we sought to address with Tracex. Every manual step that needs to be taken currently in an over-the-counter model has been digitised. And to give maybe some examples of this, customers on Tracex accept standardised terms and conditions while onboarding, and that covers all their trades on the platform, meaning their legal teams don't need to get involved in every transaction. They also link their existing business bank account and their registry accounts digitally, which means when a trade is matched, payment and REC settlement is done automatically by the platform. So there's no need for teams or manual processes with these transactions on Tracex. Additionally to that, I think, and one of the key importance for buyers is that they can use filters to specify the certain REC attributes that are most relevant to their ESG needs. For example, if you want to buy from newer projects, you can specify that you only want RECs with a project commenced operation date, and that's the age of the generation facility. They can buy from projects that are less than 5 years old or 1 year. Really, it's whatever that criteria needs to be for them. In over-the-counter markets, you can do that, but generally in those types of contracts, you specify the vintage and maybe fuel source. If you want anything more specific, you pay a premium for that. So really, I guess at the end of the day, we're helping to break down barriers in REC markets and remove all those operational inefficiencies and the risk that exists with the OTC transactions so that everyone can focus on what matters, which is driving the renewable energy transition forward.
Fiona, I was just going to ask you, is it really important to have someone that's driving this internally within an organization? How much knowledge do they need to have? Because it sounds incredibly complicated.
Absolutely. It's not a simple task. And to your point, a lot of people doing this have a number of other responsibilities too. This isn't just the only thing they're doing. So that's often what results or causes them to go to a market intermediary because they don't have that expertise themselves, or the process takes far too long for them to kind of manage that amongst their other responsibilities. So I think having someone in the team is important, a dedicated person, but also they need to have the right tools to be able to transact RECs. Otherwise, they're not really maximising their return on investment.
And if I understood what you said correctly, Fiona, generators, and you mentioned corporates. So the generators, the companies that have solar farms or wind farms that are actually getting RECs minted, and they want to sell them to corporates. And the corporates are big companies that want to buy RECs for their kind of voluntary sustainability commitments. Is that right?
That's correct. And then I guess the third category that I haven't touched on is the brokers and the traders who, this is their core business. They do trade RECs, and interestingly, they have onboarded to Tracex as customers because they also benefit from the operational efficiencies that Tracex delivers. So every time you trade on Tracex, you don't need your back office team. You don't need to issue out trade confirms because all of that is done automatically by Tracex. You don't need a finance team to either arrange payment or chase payment. You don't need your settlement team to arrange to transfer the RECs or make sure that the RECs are transferred in your account. So they benefit from all those operational efficiencies too, which is why they've become customers on Tracex.
Gotcha. And so within a company, all those different departments would normally be involved in like contracting or settling and confirming trades. And if you go with the OTC model, they have to look at each transaction, whereas if it's on Tracex, it's really standardized and it's all automated as well. So it makes the whole process for all those different stakeholders within the buying company and the selling company much more efficient.
Absolutely. Absolutely. Like we have done some case studies on generators and brokers who have been using Tracex, and they've saved up to 86% in operational costs for per trade on the platform. It's a huge amount. But I guess that's the model that has existed in the market today. And I think if you look at the technology solutions and the opportunities that exist, there's a whole lot of inefficiencies and manual processes and risk that can be removed through a digital solution.
And that 86%, that's like huge statistic. How visible is that like within the company, like in their everyday activities that perhaps they hadn't even thought about and they weren't even aware of?
Yeah, that's absolutely correct. I don't think that they had realized how much time and effort people across their businesses put into supporting transactions. So the customers we did these case studies on were very surprised at the amount of time and effort and resources that are supporting every transaction that they do. And, they're not just doing one or two transactions, like the generators are not just doing one or two transactions a year or a quarter. It's quite a good flow of trades through the market. But if you applied those savings to the broker market, it's a pretty significant saving to their operational costs.
So it sounds like for people that might be listening that are developing products more broadly, like software products that are looking at, problem identification, which is really what we're talking about here, exists, a big one, but they're not necessarily aware of. How have you gone about surfacing that, both for the people that are going to be the decision makers within the rec piece, but then those that are also responsible, I guess, for efficiency within the business, which is pretty core, I would say.
Yeah, look, I think with Tracex, one of the things we have done from the beginning, and we've continued to do this, is we are always asking both prospective customers and existing customers about their business. And it's having that curiosity to really understand a customer's business to assess what problems exist, because there may be problems that they're willing to put up with. But there's also problems that they probably put up with that they don't need to. And they certainly wouldn't if they knew how much those processes were costing their business. So I think trying to surface that data and provide a business case for what makes sense to innovate and digitize versus, oh, hey, let's ignore these problems because in the scheme of things, they're not really going to solve a lot for you and you don't care enough about them. Because there's got to be that, not that just that I don't like this problem, but there also has to be a willingness to pay for a solution.
Fiona, I was just going to ask in relation to solving all of these problems, but you're doing it on a global basis. I mean, how difficult is that to accommodate all of those different ideas and different things that happen? Because even when you talk about the legal aspects of it, there's so many different approaches in different countries and things. So how do you combat all of that into the one platform?
So I guess the common element across markets is that the OTC model applies to all markets. Whenever you're using a manual process like over the counter, like a sale and contract where it's a piece of paper sent and you've got multiple teams involved, that applies to all markets today. That's not unique to just to the US market. The differences come with the way we integrate and the solution we roll out, purely because in the US market, there are tracking systems or registries. And what happens is when a generator gets approval to build their generation asset, the RECs have to be tracked through a state-appointed or not-for-profit registry, and there's a requirement to do so in the US market. So we do interact with the registries in the US market, and that does influence the solution we have in place in the US. On a global scale, there are other registries that we interact with, and they have a different set of requirements. So there may be nuances to the solution, but essentially we have a similar group of stakeholders and participants. We have a similar set of problems in that it's currently manual processes and there's payment and settlement risk, and we have registries that we need to interact with in markets. For me, what's been a catalyzer or driver, particularly in the US market, has been the implementation of certain voluntary and regulatory disclosure requirements. So every time you see the implementation or the acceleration of compliance or voluntary standards, you see that you need to kind of evolve your solution to provide more information, support the customer with a new solution to make sure you're one step ahead of where the market is.
Once potential client or counterparty sees these problems and the value of the solution and the benefits, is it automatically that they want to solve that problem? Or is it like, what's the kind of amount of people that go, oh, we can live with it versus, oh, no, that's important for us to solve?
I would say it's probably like in terms of conversion rate, at the moment, we're seeing about a 40% conversion rate. And it's not so much that I guess the extra 60% still don't see it as a problem and still say they want to be part of it. I think it's just depending on the size of the business, it can take time to establish that relationship and build the trust. So thinking about some of the larger corporations we're interacting with, they're sort of global or multinational businesses. And so it takes time to work your way through not just the rec divisional business, but also other areas of the business that need to be satisfied that it's the right thing for them to do to adopt this solution and onboard to Tracex.
Gotcha. Yeah, like kind of enterprise sales cycle that actually, takes a certain amount of time for large companies to gestate.
Absolutely. For example, we have some of the smaller brokerage and trading firms onboarded after a meeting and then self-onboarded in 20 minutes. That's the exception. That's not the norm. So we've got a range, different types of businesses we talk to, and the larger they get, the longer they take to onboard.
Awesome. I wanted to talk about some other types of problems and also some misconceptions specifically about RECs and attribute certificates. There's a really diverse range of opinions about these kinds of certificates. Some of the criticisms are valid, some are not. Maybe you could just help us to understand what are real problems and some misconceptions going on in the attribute certificate market.
Yeah, I think critics who argue that RECs alone aren't enough to achieve meaningful sustainability in some ways correct, but they do miss the bigger picture. So RECs are just one piece of the broader decarbonisation puzzle. They're not designed to solve every aspect of climate change or renewable energy deployment. Instead, they provide like a practical and scalable tool to support renewable energy development, and that's particularly in the voluntary market. For organisations, RECs serve a critical purpose by allowing them to claim the environmental benefits of renewable energy when they can't directly procure power from renewable sources. They also enable companies to send market signals to say that, yes, there is a demand for renewables, which can further drive investment in renewable energy. But in an effective decarbonisation strategy, RECs should complement other tools like the corporate looking into taking energy efficiency measures, looking at their supply chain decarbonisation, and where possible, power purchase agreements or on-site generation. They're also particularly valuable for providing organisations with a way to meet renewable goals when, again, as I said, when direct procurement is not available. And RECs allow for businesses of all sizes to participate in the transition to renewable energy. And I guess something more pertinent to the US market and maybe the European market, where corporates have entered into PPAs, RECs can act as a bridge while the corporates wait for those longer term solutions like PPAs or infrastructure upgrades to come online. Because, we're seeing in the US market, there's about a 4-year timeline for new projects to connect to the grid. And that's a pretty significant wait for a corporate. And rather than doing nothing in the meantime, RECs act as a very good bridge for them to continue to commit to renewable energy goals.
What about greenwash, Fiona? Like, is that a thing in RECs, in carbon credits? I think there's been a lot that's happened in this. What would you say about the renewable energy certificate market?
I think the term is used in the REC market also, but I think when they do that, they oversimplify the role of RECs. As long as they're used transparently with a broader strategy, I think RECs are a legitimate way to claim renewable energy use and support market growth. I think the issue arises when companies rely solely on RECs without pursuing broader decarbonisation. And it's important to remember that not all RECs are the same. Like in practice, their impact varies widely based on the generation source, the generation location, and the additional co-benefits they may deliver. And that's something like platforms like Tracex, we try to improve that transparency, helping buyers to distinguish between the different attributes and make more strategic and impactful purchases. But I should address a common misconception. I guess say you use or consume 100 megawatts of energy across the year. Buying 100 megawatt hours of RECs doesn't allow you to claim that you're using renewable energy 24/7 because RECs aren't matched hour for hour to a customer's energy consumption profile and even from a location standpoint. But with that said, RECs are evolving. So standards have been developed and launched for what's been called 24/7 or granular certificates, which provide hourly transparency about where a consumer's electricity is coming from. And so this means that buyers can essentially seek to match their hourly energy consumption with RECs that produced at the same time and on the same grid. And some of the largest energy consumers in the world, like Google and Microsoft, they have set and are implementing targets to become 24/7 carbon free. So I think that, while there's some ways to go, 24/7 RECs will become the backbone of the next generation of clean energy products.
So what you're saying is that, say I'm a company and I consume 100 megawatt hours of power, I could buy 100 certificates and retire them. What can I actually claim if I do that? What can I say in my annual sustainability report or in my corporate communication?
You can say that you're using 100% renewable energy But I guess the nuance there is that the types of RECs you buy and the location of the RECs might not necessarily align to the time and location that you're using energy. So some corporates could buy energy from a solar farm, and if their facilities run through the night, they're really not using renewable energy around the clock. And that's, I guess, the gap that 24/7 or granular certificates is seeking to close.
So what you're saying is that RECs are not necessarily like the panacea for everything, but they do provide something that is very useful. And it sounds like the industry is also evolving and being more specific around time and place. And you see that that's ultimately where the market will head. And it will kind of merge with, if I understand correctly, them buying their own renewable energy. Like those things will be more akin to each other, whereas now there's more of a difference.
Yeah, it's interesting. When I entered the renewable energy market, I assumed that RECs were time and location matched because that's the way energy works today and energy markets work today. But in actual fact, it's not. And it's not that it can't be done. I think that it's just, RECs need to evolve to a 2.0 where they can match time and location. And that will certainly help the grid in the long run too, because then you'll be signaling the market with real demand exactly where that renewable energy is needed and at the time it's needed too. So that's the real benefit of moving to, say, a 24/7 REC procurement strategy.
I'm interested from both of you because you're both traveling in circles where you're engaging with lots of different people. And I'm interested to know how much of this is being driven by legislation forcing people to look at all of this versus a real drive and incentive to do it. Because it seems like there are some loopholes, as you're pointing to, where they can tick a few boxes and get it done, even though they can sort of say it's 24/7, but it's not really. And, there are other things that they can look at outside of this. And are they bothering to do that? Where do you see the companies are sitting at the moment, and how much of this is being driven, by a real motivation to want to do it for the right reasons?
I think the vast majority of the 24/7 solution is being driven by the corporate market, the voluntary market. I know that there's a lot of advocacy and policy driving around looking to move to a better way of measurement. But I think what governments and policymakers are trying to recognise, it's something that will need to happen in stages. And when you look at across the range of corporates that have energy or ESG commitments, not everyone is ready to jump straight into 24/7 energy matching. Everyone has a different kind of maturity level. And so what I try to tell customers when they're curious about 24/7 is that it's really just a journey. It's not about starting from the get-go. It's really trying to understand where you're at and what tools you can leverage to get to 24/7 carbon-free. And there's a number of tools you can leverage ahead of jumping straight to 24/7. But I would say it's primarily driven by the voluntary market. The only caveat to that, I would say, is with the passing of the 45V bill, which is the green hydrogen bill, there is a regulatory pressure that will come into effect by 2030, where all green hydrogen production has to be matched on a time and location perspective with new renewable sources. So that will be the trigger from our regulatory perspective.
Yeah, I mean, I would echo what Fiona said. I think that a lot of what we're talking about, like in Tracex and also our other products at Power Ledger, it is around a regulatory framework that is encouraging these things and allowing these things. But it is companies deciding to do it, voluntarily. But I'd say that there's definitely big regulatory frameworks which are, creating the foundations for that to occur. I'd say that what Fiona's talking about in terms of companies that really want to be specific around time and place are the corporate sustainability leaders that want to pioneer things and be best in class on a voluntary basis.
Absolutely. Like 24/7 really at the moment is the gold standard, and it's the 1% corporations of the world that are leading the way, which is great to see. It's really exciting, and I think that it will be the way of the future. But I think we've got some ways to go yet, not just for the corporates, but also I think registries and tracking systems will need to update their software, and everyone wanting to participate in that transaction cycle will need to uplift their current trading processes. I don't see OTC markets that are reliant on manual processes today being a feasible option for customers wanting to match their consumption on an hourly basis. So I'm really excited to see the progress in this area, and at Tracex, we're committed to 24/7 RECs when the market is ready.
How big is the REC market, Fiona? Like, obviously 24/7 has a way to go, but the REC market now very big, or is it quite small?
Well, in the US market, it's about $14 billion. I think it's forecast to grow to I think around $40 billion by 2033. So it's a significant market. Certainly impressive, and it's exciting to see corporations that still adopting or even remaining committed to their sustainability goals.
That's all for this episode of Unblocked. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcasts Done For You. We look forward to your company next time on Unblocked.